Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
And then add that information together to what our chart is telling us. Again, if you combine the same stages of the market with the 4 stages of the economic cycle, then you can figure out pretty much, are you at the bottom of the chart or the top of the chart? Have you had a big uptrend or have you had a big downtrend? Are you basing, which means moving sideways, or are you in some kind of a trend move? It's very, very important to pay attention to where you are. So I found this little slide here, which is a pretty good one, because on this slide we have stage 2 described as greed. And so if you're talking about sentiments of traders, obviously when we have rising prices, everybody becomes greedy, and they expect prices to continue higher and higher. Okay, and then of course we get to a point here, stage 3, where we begin to top out. We call that again the distribution phase. And what's happening is that the big institutions that bought down at the bottom here are selling now to the public. And they want everybody to be excited. They want everybody to be thinking that prices are going to continue higher and higher so that they can unload their positions at higher and higher prices. Eventually, we could break out to the bottom and start a new stage 4 decline, which is pretty much what's going on in most of our markets these days. But there's always a chance that at that topping phase, we could break out to the upside and make a new uptrend. So the most important thing is after we top out like that, let the chart tell us what's going to happen next, and just follow along with that. This is another little stock market cycle slide that I found that pretty much says the same thing. And the reason I put it up here is because the currency cycles are the same. Every cycle is just about the same, depending on the assets you're trading. But I noticed here that it says investors can't wait to buy stocks up here at the top, where we have excessive optimism, strong fundamentals, strong economic news, good news, record earnings. The investment brokers are optimistic. So again, that's when the public gets excited to buy the stocks. Right now, I know you're probably like most people, you're looking at the stock market and you're saying, I wouldn't touch it with a 10-foot pole. And the thing about that is some point in time we will bottom, we will base, and we will break out into a new uptrend. And what I'm worried about is seeing an entire generation decide that the stocks are not for them. Not now is not the time to be looking to pick the bottom. There's no strength, there's no signs of strength at all. But eventually, well, when you watch this webinar, you'll see what those signs of strength look like when the turn is going to happen. Okay? We follow the dollar index itself, which is the dollar index versus a basket of currencies. The reason I always put these slides up is because we're looking at the dollar index from 1979 to 1988. And again, here's the 4-stage cycle from 1979 through 1988 on these next 2 slides. An accumulation followed by a steady uptrend, followed by a very, very tiny top, and followed by a collapse. Okay, so this is pretty much what every chart of the stock market looks like. Every stock in the stock market, the indexes themselves, they all look pretty much the same as this. So again, this repeating cycle has been going on now for, this is 20-some years ago. Here it is today. Greed and fear don't change. So keep that picture in mind. And when you're forming your opinion, most important thing is check on the weekly chart where you are to determine where price is in the 4-stage cycle. If the economic news is gloomy, check to see if prices are still declining or beginning to base after a declining phase. That could be a hint that prices are going to turn. If all the economic news is rosy, check to see if prices are still advancing or beginning to base after an advancing phase. And this is how you can combine the technicals and the fundamentals and keep an eye on where you are in the big picture. Back in November when I was on the last time, we talked about the dollar having a huge move against most of the currencies except for the yen. The fundamental reasons for that, of course, was the credit crisis was really starting to take off around the world. and everybody was slashing interest rates almost together as a group to try to get this under control. At the time, because of the rally in the dollar, the only explanation that we could come up with was that the dollar was probably the reserve currency still, a safe haven in times of turmoil. Okay. Jay, the dollar index actually is just a basket of the dollar versus 6 currencies. And you can get information on that if you want to Google U.S. dollar index. It'll bring up the breakdown of the actual makeup of the index. Okay. That's a good question. You can also, of course, watch the ISE indexes. Is a great idea to keep an eye on the currencies individually as well as a group. So back here in November, here is the chart of the dollar, and it made a tremendous move between actually March and July when it broke out of that trading range on the bottom, that accumulation phase. It had a very, very strong uptrend. And then, of course, we got up to the point on the chart between 87 or 88 and about 82, and we ran into some resistance, which used to be support in the past, so it's resistance here in the future. Okay, so that was our picture at that point in time. The next chart actually shows that we completed the 4-stage cycle. That resistance up at 88 or so actually proved to be too much for the dollar index to get through, and the dollar came crashing down through the bottom of our channel, which of course is a stage 3 top now because we closed below that area. And then we came down to an area that used to be resistance in the past, near about 79, and we had a big bounce. So this is the picture back in November and early part of this year. So where are we today? All right, well, today we've got the dollar completing the 4-stage cycle against the euro and the Swiss franc, and now that parabolic move was retraced, which is always something that I warn everybody about. When you move straight up like that, you could probably fall just as far, just as fast. So the dollar is basing in a trading range right now against the Aussie, the Canadian, and the British pound. And the dollar has just recently broke out into a new stage 2 uptrend against the Japanese yen. Okay, so here is a picture of where we are on the dollar index, and we're back up here challenging the resistance again near 89 for the second time. Traditional technical analysts look at that and they call it a double top, and it's possible it could be a double top, of course, but we won't know unless we break out of the bottom of the channel again. And I'm not one guy who's like to predict. What I usually like to do is wait for the price to make a move one way or the other. If we break out to the upside here and we close above that 88 level or 89 level, we'll probably find some support on the way down. But it's also possible we could go back down and just stay inside this channel for a while longer. There's a logical reason for this. The reason we aren't rallying past 88 to 89 is because there's supply up there that needs to be absorbed. Supply are leftover sell orders that need to be absorbed before price can move higher. The reason that price moves up and stops all of a sudden is because price is moving higher looking for sell orders to shut off the buyers. So if and when the supply of sell orders is absorbed, then the dollar index will be able to rally up and test the 2005 highs near 92.50. But if there's too many sellers, then what will happen is we'll probably come back down and retest that 79 support. Okay?
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.